Hi everyone, this is Mrs. V Chen. Welcome to my Form 5 Accounting lesson number 14, and today is 24th March 2020. Okay, so we will do another DSE question in 2017, and actually in this question we have all things related to partnership included in this question. So that is, we have these two partners before, Bill and Ben, right? And later on what happened, and then we have Ben plus Tom. So you can see Tom is the new partner, so we have admission of Tom. Okay, and then no more Bill, so finally we have retirement of Bill. And then 1 year later, so the whole partnership will be dissolved. Okay, so this is the idea about this question. Okay, so let's see what do we need to do in this question. So part A here, we need to prepare partners' capital accounts and showing all the adjustments related to retirement of Bill and admission of Tom. And then part B here, we need to prepare the appropriation accounts and look at the dates. This is 1 year later. So because timeline is very important so that you will understand the whole picture. So what is the date for admission and retirement of that? So which is on 1st of January 2020. All right, so and then after that, when you look at appropriation accounts, it is already 1 year later. Okay, and then you look at part 2 here, we need to update the partners' current accounts. So Ben and Tom, so this is already the new partnership. Okay, so this is the capital account. So the capital accounts, okay, should be on 1st of January for recording all the admission of Tom and retirement of Bill. And then when we come to this appropriation accounts, this is already for the new partnership, and the current account here is also for the new partnership. Okay, and then the final thing in this question, so the next day right after 31st December of 2016, so on 1st January 2017, so there is dissolution of partnership, so therefore we have to prepare the realization account. So therefore I also put my realization accounts. So here this is realization accounts, and also we need to draw up capital accounts, so for dissolution of the partnership. Okay, so therefore this is trial balance as at 31st December given to us. And when you look at the date for capital and current account, which is at the beginning, and so therefore they are the old partners, so you can see there's nothing done related to retirements of Bill and admission of Tom. Okay, so next I'm going to close this capital account for Bill and Ben in my capital account here to begin with. So I have these two. And also since Bill is leaving, so the current account for Bill here should be also close to the capital account. So therefore I have this current account for Bill because he is leaving. All things should be closed related to Bill. Okay, and then next, so here I have current account for Ben. All right, so to begin with, and be careful, this is a negative balance, so that in my current accounts, so I have a debit balance for Ben, and then this is the negative balance to begin with, and Tom will be the new partner. Okay, next I'm going to go through this step by step. So here point number 1, Tom had to bring this much as capital because Tom is the new partner, and then he was entitled to a monthly salary of 2,000. Okay, so let us do some revision on the double entry. So the first double entry, so it's about capital introduced by Tom, so more cash in the business, and then we'll credit capital. And also, what do you think about salary? So the double entry for salary will be debit profit and loss appropriation account. Now be careful, avoid careless mistake. This 2,000 is for months, so you have to times 12. And then salary will go to partners' current accounts. Okay, now I do my posting, credit Tom, capital, and because of cash at bank, because for this much, we won't put that as cash, we will put it in the bank account, right? Okay, so therefore, in the profit and loss appropriation account here, we have to pay, the firm has to pay salary to Tom, and this will go to the current account, so credit current account. So because of salary, this is description, and this is the name of the account. Okay, now we come to the most difficult point. So here, point number 2, equipment was to be revalued at 248,000. So what is the time for doing this? It should be at the beginning of the year, which is on 1st of January. However, if you look at the equipment here, so 120,000 was at the end. However, this figure is before revaluation. So therefore, we need to analyze this point step by step. Okay, so here is the timeline for explanation. So net book value given to us in the trial balance, which is after depreciation, however, before revaluation. So therefore, I need to go back to the beginning to find the original net book value. So I don't know that. I set equation and let that be x. So x times 20% off, so I have 80%, so which is equal to 120,000. All right, so if you use a calculator to do this, you will get this 150,000. So this is 150,000 before revaluation. Okay, look at point 2. Now we need to change everything to 248,000. So this is more than the old value. So the double entry will be, I need to debit equipment to increase the value and then credit realization accounts by the difference. Okay, so next point 2, we have the timeline to explain everything. So we are given in the trial balance, this is the net book value. However, this amount is after depreciation, but before revaluation. So therefore, we need to go back for this to find the original value before revaluation. Okay, I let the old value be x and then times after 20% depreciation. So that will be 80% equals to this to get the original old value before revaluation. So this is the calculation divided by 0.8. So I will have this 150,000 before revaluation. Okay, so how much do we need to change? We need to change that to 248,000. That means we need to increase office equipment by debiting equipment, okay, and credit revaluation accounts by the change. So how much is the change? So 248. So this is the change. So 98,000 and 98,000. So you can see to increase the value, this is a good thing. Okay, so I can cancel the revaluation account. So 98,000. Okay, using capital accounts. So who's going to share this gain on revaluation? It should be always the old partners. So the old partners will be Bill and Ben using the old ratio. Okay, like that. Okay, so always the old partner will share the gain or loss on revaluation. So here I need to credit capital for Bill and Ben. So here in my capital account, I have this revaluation, okay, shared by old partners only. Okay, next we need to adjust depreciation as well. So this is the correct amount after revaluation. So this is the correct amount for depreciation. However, the firm has used this figure before revaluation. This is the wrong figure done in the book. So therefore, you can see depreciation is understated. Okay, so the double entry to correct the mistake will be debits profit and loss and credits accumulated depreciation by the change, and the change is 19,600, 19,600. Okay, so here is my appropriation accounts, and then I start with net loss in the trial balance here. So this is net loss before interest, 371,000. So I start with this 371,000. So since depreciation being understated, so we will have more loss, so that we add this 100. So we add this 19,600 for adjustment of depreciation. Okay, and then remember 1 year later, what happened? We have dissolution. So what is step 1 for dissolution? We need to transfer all assets into the realization account. So therefore, the amounts for the first one, equipment, should be the adjusted and revalued amounts, and after depreciation, so this will be the amounts that we transfer into the realization accounts. Okay, point number 3 is about goodwill adjustments. This is also very straightforward. So this is the table. Okay, we use old ratio and then new ratio, and then we have gain and loss here. So now we have Bill loss, Ben loss, and Tom gain. So what is adjustment? We always debit the gain here, and then we credit the loss. Okay, so I just go to my capital account here. So I have Bill and Ben, which is a loss, so 24,000. Okay, I put goodwill here, and who has gain? So which is Tom here. So I debit the gain, so 48,000 for the gain, and the description is goodwill. Okay, points 4 here is also difficult. So we have this amount due to Bill was to be left in a loan. All right, since Bill is leaving, and this will be a loan, that means Bill must have a positive balance in his capital accounts. And also we need to pay this 2% interest per annum. All right, so here is the timeline and the analysis. So at the beginning of the year, so we have retirement of Bill. So therefore, to close positive balance in the capital account, so debit capital, however, we don't pay any money, so the credit side will be 2% loan. Okay, but the point is to get this, we need to refer to the balancing figure in Bill's account. So here is Bill's column. All right, so this is the credit side. So we have credit side bigger than debit side. So therefore, we get this figure 252,500 for the loan, which is the balancing figure. So that I go back to my diagram here, 252. So this will be 252,500, 252,500. So how do we get this figure? It is the balancing figure in Bill's column in his capital accounts. Okay, so therefore the loan created here will be account of liability, and 2% means the interest charged per annum. So therefore we need another double entry at the end. So that would be debit profit and loss account. So 2% on this amount. So this is 5,050, and credit interest payable. Okay, so therefore after these two adjustments, we will have this in the trial balance. We need to add two more things, that is loan from Bill and then interest payable, because later on when we come to dissolution, we need to consider these two things as well. Okay, so in the appropriation accounts, we need another adjustment which is related to interest on loan. Okay, so therefore the description here will be net loss after interest, and this is the amounts to begin with in the appropriation accounts. Okay, so therefore we will have this negative figure share of loss to be shared by the new partners, Ben and Tom, using the new ratio, and this share of loss, okay, will go to the current account on debit side, so 209,825. Okay, and the name of the account is appropriation accounts, and which is share of loss. Okay, so therefore after share of loss in the current account, we can now close the current account. So if you use your calculator, you will get this closing balances in the current account. So here I also have another careless mistake. So you can see we add on credit side, that means credit side is smaller, so debit side is bigger. So therefore we have a debit balance in the current account, which is negative. All right, so that we need to close this later on. So close current account, and then debit capital accounts for dissolution. And also the debit balance in current account is negative, so when we close it, it will be on the negative side here. So the current accounts, so from the balancing figure in the current account here, so this is the capital accounts. So we have current accounts to be transferred to capital account for dissolution. All right, now we have finished part A and part B. Okay, and next we go to the final thing on this page, and then we come to realization accounts, which is for dissolution. All right, so remember what is the first step for dissolution before we look at this, which is to transfer all the assets except cash at bank into the realization account. So here I have realization account, and then we have transfer equipment before into the realization accounts, and then I just follow the steps here. I need to transfer trade receivable into realization. I need to transfer inventory, and then we don't transfer cash at bank because we need to have another cash at bank later. Okay, so therefore I have trade receivable transferred to realization account, inventory in the realization accounts, and for cash at bank we don't transfer into realization account because this is my cash at bank account. So to begin with this 21,000. Alright, so now during examination, this cash at bank account is not required. So you shouldn't waste any time to do that during exam. But now since I want to check whether I can make everything balanced, so I draw up this cash at bank account here. Okay, now we come to point number 1 here. So we have equipment was taken over by Ben, and the double entry is here. So we charge Ben, so we debit Ben's capital by this much and credits realization because we already have equipment transferred to the realization account. So the posting will be debit Ben, so by 174,000 because of realization accounts, and that is equipment. So just follow double entry. Okay, and credit realization account with the same amounts, and this is capital and being taken over by Ben. Okay, so point number 2, total amounts received from trade receivable and sales of inventory were 96,000. So that's the double entry will be, so receive money, so more money in the bank with debit bank, and then credit realization. So here cash at bank account, so we have this on debit side, and because of realization accounts. And then in the realization account here on credit side we have 96,000. Okay, so actually you don't need to worry about the difference between the figures for trade receivable and inventory because the final gain or loss will be calculated after we close the realization account, when we close the realization accounts. Okay, point number 3, we have trade payables were settled in full at 29,000. So we don't transfer trade payable into realization. And then here we have trade payable, which is 30,000. Now I'm going to settle it. So to settle it, so the double entry is here. So debit trade payable, 30,000. So why we settle it? Because we pay money, but however, we only pay 29,000. So we pay less. So we earn another 1,000. So which is discount received it, since we don't have any partnership tomorrow, so all the profit and loss will be in the realization account because this is discounts received it. Okay, so the posting will be 29 on credit side of cash at bank because we paid money to trade payable, and then here we earn another 1,000 which is trade payable because of discounts received like that. So this is positive. On credit side of realization account, same as before. This is negative in the realization account. Okay, so point 4 is the most straightforward one. So we have these expenses for realization expenses, 6,000 were paid. So we debit realization account for this 6,000. All right, and then we have to pay. I go to cash at bank. On credit side, we pay this 6,000 for realization expenses. Okay, now we come to the last point, which is also quite difficult. So after negotiation, the loan interest due to bill was waived and the loan from bill was settled in full. Okay, so therefore let's check what do we have left in the trial balance. So actually we have closed all things here and 2 things left, that is loan from bill, and then we have interest payable. So for this, how do we settle that? By paying money. Therefore, I need to credit cash at bank here, paying money to settle loan from bill. And what about this interest payable? This is a very special double entry. So this interest payable is a kind of current liability. So to close it, we go to the debit side. So we debit interest payable. So therefore no more. And then since in the normal situation, we have to pay money, but the condition is saying here to be waived. That means we don't need to pay any interest to bill. Okay, so therefore the firm will earn this as the positive side in the realization account. So this special double entry for this interest payable will be debit interest payable to cancel this, and this is a good thing in the realization accounts. This is the most special thing in this question actually. Okay, so therefore I go to my realization accounts. So this 5,000, so this 5,050 will be interests payable to be waived, to be treated as a kind of positive thing in the realization account. Okay, so finally we have closed everything in the trial balance, and also we have gone through all the additional information. Okay, now here we come to the first account to be closed, which is the realization account. So if you use your calculator, you have debit side bigger than credit side, so which is not a good thing. So therefore we have this loss on realization, okay, to be shared equally by Ben and Tom, so that this loss will not a good thing in the capital account, so that will be on debit side like that. And then the description is realization accounts, and that is about loss on realization. Okay, so next, when I check my capital accounts, and then I realize that I have missed something here. So that is the opening balance. So where to get the opening balance, I need to refer to point A at the very beginning. To close this, I have Ben, and then I have Tom after all the adjustment for retirements of Bill and the admission of Tom. So therefore I need to post this too into my capital account here, so as the figure to begin with. All right, so this is 563,500 and 192,000. Okay, and now I can close to work out so how much I have to settle in the cash at bank account. Okay, now I come to close the capital account for Ben, and this is add on debit side because debit side is smaller, so which is credit balance, which is positive, so that the firm is going to pay money to Ben. And here for Tom, Tom has a debit balance, so which is negative, so therefore Tom has to pay money and the firm is going to receive. All right, so that the posting here will be in the cash at bank. So this is the amount paid to Ben, and then the amounts received from Tom. Okay, and then I realized that. So when I use calculator to work out that, oh, I don't have the same amounts on debit side and credit side, right? And what is the difference? The difference is exactly 240,000. So therefore I need to find my careless mistake. So, and 240,000 is very familiar, and here I realize that I have this 240,000, is that right? Which is related to Tom, and Tom is a new partner, and Tom has to bring this into the business. And the trial balance here, this is before adjustment for admission and retirement. So this is the error I have made, and then the error I have omitted in the cash at bank account, so that here I need to debit cash at bank for admission of Tom. So this is capital for Tom. So right after this correction, so how much is it? Okay, so 159,000 plus 240,000. Yes, see, exactly same as that's the total amount on the credit side. So this is it. But during examination, you don't need to waste your time to draw up this. Okay, but anyway, after dissolution, all things must be closed. So the first thing to be closed is the realization accounts, and then you work out gain or loss on capital into the capital accounts, and then close capital accounts, and finally, okay, you should have match everything in the cash at bank account on the debit side and credit side. Okay. Alright, so this is it. So thanks for watching my video. I'll see you next time. Bye bye.